morning, everybody. Welcome back to the Everyday Growth Advisors live stream. I hope you guys are having a great morning. Good morning, good morning. I know it has been a crazy week, but some good news this morning. Non-farm payrolls actually coming out really nicely. Even private payrolls coming out nicely here. Let's see what happens and how this market reacts. It does seem like the market's kind of a little irrational right now, but it's fine. I actually prefer this irrationality. It gives us an opportunity to do a bunch of different things. So welcome into the live stream, guys. It's Friday. It's another week coming to an end. Of course, as usual, let's get everybody to smash the like button, number one. Number two, let's get some new tickers votes going for next week. There are a lot of really great candidates to buy up right now. Really a lot. I'm going to show you what I've been busy doing this week, and absolutely going to be something that you guys can have a look at. I'll give you a little bit of an inside view on what we do at the Everyday Growth Advisors community. So yeah. First things first, I actually got assigned my CCIV puts today, two of them, obviously. So I remember I got these. Actually, before this I had different puts, and I actually rolled them over into 95 puts and collected about $5,400 on these puts per put. Okay, and I just got assigned today, right now, or just a couple of minutes ago. These two puts. So let me break down the math with you guys so you understand where my cost basis is and kind of show you guys a little bit of what's going on with CCIV here, and why I actually am okay with this situation, or how I intend to get out of it, but specifically for me, I don't intend to get out of it. I specifically actually want to own these shares because I actually believe in the company long term. Okay, so let's get this. Let me show you guys what's going to happen here. Okay, sorry, let me get the blue color. Okay, perfect. So I'll get my writing pad out. Okay, so initially, on my first round of the selling puts on CCIV, what happened, if you watch my video, I received a total of $3,000 on just selling premiums on a bunch of, 30 puts and also a $50 put. This I sold two and one of these, and out of these I received $3,000 in premium when I closed out these two trades. I bought to close, okay, and I received that. And what I did was I rolled these over into 2 times $95 puts that were expiring 3/19, okay, and this paid me a total of $54 in premium per contract. Okay, that means $5,400. All right. Times 2, that gives premium of $10,800. Okay, just to give you guys a little bit of an update, see if you can follow along here. Okay, I received $10,800 plus $3,000, right, from this right here. Okay, so that's the total premium I received was $13,800. Okay, now my cost basis for these contracts are going to be $9,500 times 2, right? That's my cost basis. Okay, and so I'm gonna get assigned the shares at $95, which means that I get assigned these shares at $19,000. Okay, and if you net those two out, $19,000 minus $13,800, that gives me, wait, hold up, 19,000 minus 13,800. That is $5,200, okay? And since I have 200 shares, that's going to mean that I paid $5,200 divided by 200 shares. That gives me a dollar cost average at $26 per share, okay? So I wanted to purchase CCIV shares at a very low rate. I was initially going to get them for free, but then I got early assigned, and then CCIV didn't really move my way. And so now I'm going to take the assignment at $26. I'm okay with it. I'm completely fine owning the stock at $26 because I believe that the value of the stock will go far above $26 in the near future when this bull market resumes. Okay, so I'm completely okay with this assignment, and I'll be happy to take it here with this cost assignment. Okay, at $26. So nothing to really worry over there. And yesterday on this trading account, I added a whole bunch of positions. So first things first, between the day before yesterday on the live stream and yesterday, I actually added a total of $30,000 to this account, and then I've also added in another $10,000 this morning. Okay, so this account is now standing at about $50,000 total, and I will be managing this portfolio with shares in them to have full transparency with my team on what are the shares that I'm buying. Many people can say that I'm in this shares or that shares. No, I don't want that. I want us to actually show exactly what we're doing. And so this is actually going to be 40K equity. So that transparency is very, very important to me. And I think being accountable and showing your followers what you're doing is simply just the least basic thing you can do, right? It's the least basic thing you can do. You can post charts, you can do whatever the whole day, you can talk about how you're profiting and show your 1,000% profits on your community, but if you don't show them exactly your portfolio when you log in, like from real-time data, connected directly, show the login screen, everything on a daily basis, you're doing your community an injustice, because you could be bullshitting any given time, okay? Any given time, all right? Now, obviously, market conditions have been a bit adverse, and therefore, the portfolio has taken a little bit of a hit, right? We're down about, I want to say, what is this? We're down about $700, okay? We were up 30%, and now we're down about $700. But on this dip, I bought so many shares of companies that are selling at a fire sale that I'm very, very confident that by the end of this year, this portfolio will be up a pretty good number. Okay, I'm not going to project exactly how much this portfolio will be up, but I think that by the end of the year, we'll be seeing at least more than a 20% return on this portfolio. We'll beat the S&P 500 by miles for sure. Okay. Putting together the options tactics and putting together everything else that we will be doing. Obviously, on a downturn, you can't really do anything much about it, okay? My biggest allocation right now will be CCIV, which I'm going to scale out slowly. I don't want such a big allocation on this. I will take 100 shares and hold them into the future. In fact, maybe even just 50 shares, and then use the balance to put into other investments that I really like, okay? And sell premiums mostly on those investments as well, okay? So that's going to be the strategy with that portfolio. Okay, great. That's just a little bit of an update on CCIV, because I wanted to give you guys a little bit of a kind of a update and let you guys know what's happening with it. Remember, if you're following my journey and stuff like that, you have to become accountable. You can't. If people are following you and you're not accountable for what you do, that just it removes all seriousness from the way that you do things. You know what I mean? And that's not a good thing. That's not a good thing at all. Okay. So early assignments definitely do happen. You got to be prepared for them. Now, what am I planning to do with these 200 shares? Well, I can sell 2 calls at a time. And for example, let's say I want to sell CCIV calls, right? I can do that. Okay, I can do that. Now, remember, the options chain on this is still significantly high IV. And this is a good time to sell calls, okay? This is a good time to sell calls. But do I want to do it right now? No, I kind of want to do it when the stock is kind of going to the upside, right? So let's say I pick shorter expiries even. Like let's say I do the 12th March, right? And I do a $30 call, right? Or maybe even a $20-something call, right? Maybe like maybe a $30 call would be decent, right? A $30 call would pay me almost $1, okay? And that would less than $1, maybe $1.60, right? And then what would happen is by next week, I would gain $160, and that would offset my cost basis furthermore by $2. And I can do this every single week, okay? Every single week until 19th March, and I could even take the $30 call for 19th March if I wanted 2 weeks out and get $1.43 for that. Sell 2 of those, then my cost basis goes down to $23, and keep doing this for a few weeks until the stock price goes up. And as the stock price goes up, the value of these calls will go up, which will allow me to sell even more expensive calls, okay? And eventually, the cost basis of these shares will be 0, okay? That's what I'm aiming for. I want to get these shares for free. I basically only paid $26 per share now, which is higher than what is trading right now, which is, okay, it's a little unfortunate, but it is what it is, right? But it's definitely not worth $26, right? And so I can keep selling calls against this position, the covered call strategy, and keep gaining premium and get these shares for free into the future, okay? So this is my strategy with CCIV, and when you are selling premium, you can always find a situation to maneuver out of it, okay? And that's the main thing that you have to realize, all right? Cool. Good morning, guys. What's up? Good morning. What up, Seabass? Kevin, how are you doing, man? Kyle, Santosh, what up? Let's see. Mark, Aaron, hi. Susie, Sably, what up? David, Jacob, hi. And Francesco, hey, nice to see you here, bro. Haven't seen you here in a little bit. Nice to see you back onto the Everyday Growth Advisors live stream. Okay, great. Now, jobs creation was a little better than expected. I expect this to actually mean today we may go red to green. There's a possibility, okay? Market's improving, but then remember that the main focus and what I've been talking about for a long time is when you know we have good news, it's going to cause bad moves in the market, and we have bad news, it's going to cause good moves in the market, because the market's not pricing in things that are happening right now. It's pricing in things that are happening into the future, 6 to 8 months from now, okay? And so the front headlines today is that the jobs report was better than expected. But then the main focus of the market is not about the jobs report specifically, even though that is something that will weigh on investors' minds today, which will cause a green wave up more than likely today. But the bigger picture is whether the bond market is going to continue to throw a fit, okay? And the 10-year yield, how is that performing? Let's see. So the 10-year yield continues to climb here at 1.6 now, okay? And the 30-year is probably even worse. And so let's have a look at these yields on the... oh, wait, I already have it open. There it is. So 1.5, and it's already at 1.6. And so remember, the 10-year yield here at 1.6 is higher than the S&P 500 dividend yield, okay? That poses a little bit of a challenge, and we don't know the S&P 500 dividend yield for February yet. Those numbers will be out in a couple of days, I guess. Okay, we'll come back here to watch that on Monday, see if we can get that information. The S&P 500 dividend yield will not be able to be calculated until we know, majority of how the companies are reporting the end of February. Okay, and so that will be calculated very soon, and we'll get those numbers as well. Okay. So jobs report combined with a little bit of bullish news may set a wave up in the market today, green wave. That's what I would predict. After 3 weeks of roiling and red days, endless red days whatsoever, we want to see a little bit of a buy up back on S&P 500. So let's actually see what's happening to the S&P 500 right now live. Yeah, there you go. So we have a little bit of a bounce here from this level here, my demand zone that we drew. This was actually the level at which we were predicting SPY to come down to. This was a key level for a bounce as well, but then also we could see further downside to the 366 levels here. This is a main key level for SPY. So might be a temporary up before another drop, or we could just see a reversal altogether here. Okay, now just to point out to you that this drop and this correction from the top has been exactly 6%. Okay, it has been exactly 6%. So that's a nominal correction that happened on the market on a uptrend. Okay, this means that we may just continue to go to the upside, or if we see continued fit, then we will see sideways movement. Okay, we may see sideways movement for a while. Okay, this is the reason why I have gone long with shares. Okay, and so that's something that we should absolutely be taking into account. All right, great. Let's see here. Good. Okay, now another announcement is for those of you that have been interested in taking the technical analysis course. Remember that the course is now live for signups. Okay, and all you have to do to sign up is go to learncompoundgrow.com, click on courses, click on technical analysis. It'll bring you to this page. You can look at our curriculum, look at everything that we're offering on this course, and sign up. I would suggest you to sign up as soon as you can, because spots are filling. Okay, spots are filling, and we will have a finite amount of spots for this. I don't want it to be an overcrowded class, so I'm going to keep it pretty small so that we can have quality over quantity. My style, I don't like to stack it up. I like to make sure that everybody has really ample time for learning. Okay, so go have a look at this. If you are keen on joining, this is where you'll find it. Go to the website and you can have a look at our curriculum. Okay, now over the past these past few days, we were on the community trading a lot of energy financials. Those were our primary focus. Okay, and So we made a decent coin on BP, ExxonMobil, XLF. Those were mainly the things that I was buying and kind of trading this week. So that was something that we benefited from. And then we also obviously had some SPY puts, Wix calls. Those were things that we were trading this week on our community. Of course, I'm sure that some of you may be part of other communities where, they just kind of sit still and say, hey, there's really not much to be done at this point. Just wait and, hold out till we see that things improve. But I can't stress how weird that is, because if you're a day trader, this is precisely the moments when you have to hunker down and take trades, because this is where the volatility is at. This is the time you get in. This is where you really take advantage of the liquidity in the market or the fear in the market to provide you with additional alpha generated capital at this moment. Okay, so you can see SPY pushing up a little bit here. So let's look at the technical analysis on SPY real quick. But right before that, let me just get done with the news here. So China's growth target, okay, let's just ignore all of the news that doesn't matter. China abandons 24-year experiment with open Hong Kong elections. Okay, pick up in hiring points to job gains, renewed growth. Okay, that's good. S&P 500 on track for a third week of decline, led by tech. This is a good spot to get some tech. I'm not saying a lot of it, but we should get some. Okay. China sets 2021 GDP growth target at over 6%. I don't think it's impossible. I think it's very possible. Okay, and then Treasury route, bonds. Don't forget one thing. China has been ahead of the entire crisis for the whole time, and so they're reopening and they're re-engaging with a central government like that. Is going to be much more quicker than any nation in this world. Okay, and their population's not going to say we are afraid of taking the vaccine. They're going to be like, give it to us. Like everybody's going to take the vaccine, no questions asked. You do what the government tells you to do there. In Asian countries, that's how it works. Even in Singapore, that's how it works. The government tells you to take the vaccine, you take the vaccine. You don't be an idiot about it. You do it because you want things to go back to normal, right? And obviously, if you have some allergies and this and that, those are things that you can't help. But mainly people, will take the vaccine and will get better, and then we can get that herd immunity thing going, and hopefully that kind of sets things in the right path there. But I really hope that I can, come 2022, get back to America and visit some of you guys. I'll be holding hopefully a big gathering for the EGA tribe sometime in 2022 for you guys to come and visit. Who would really like there to be like a gathering of some sort so that we can all meet and, have a little bit of a trading session together maybe, in 2022? That would be nice, right? I feel like we should definitely start planning that, and when this thing reopens, we should be able to, take advantage of it. So, okay, great. Yeah, like a party. We'll have it rave style too, like in a warehouse. We'll have lasers and, all the cool stuff. Except for it'll be Powell dancing on the stage. Okay, Treasury yields. That's what we're talking about. Treasury yields still shooting up through the roof. That'll honestly, I don't think it's gonna be a big problem. Meaning to say, I don't think that it will be. Okay, it's gonna definitely affect, the fact that the Treasury will have to look at this at some point if it goes bonkers. But for right now, let's let the market play out what it wants to play out. I think that it's throwing a fit, and it probably will. This is more like, let me tell you guys something. Many people say, the central banks or the Feds have, controlled the market, blah, blah, blah. They can print money forever, this and that, yada, 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 right? That's what all day traders will tell you, all right? Majority of people who haven't been in this market for a long time, they're going to try and always convince you that, money printer goes burr, and, you will always never stonks only go up because Powell is our king, right? That's what people say all the time. But little do they know, okay, one important thing, which is that the market can dictate what the Fed does by pressuring the Fed, okay? If people continue to buy up the 30-year, all right, that's going to mean that the yield curve is going to be upward sloping, right? It's going to be upward sloping like this, okay? Or it might go even steeper like this, right? and that actually poses challenges for the Treasury, because they would have to end up paying higher yields, okay, on those coupons. And so the Fed also doesn't want that, and it may spur the Fed into doing some asset purchases, which will stabilize the price of bonds. Okay, so these are all things you have to take into account. Sometimes it's not really up to the Fed. Sometimes the market can force the Fed into doing things, and that's just the way things go. Okay. For those of you that want to read my rants, I've been ranting a lot on Twitter lately. I promise you, it's not stuff that you shouldn't read. It's really honestly things that I have been just letting out from my honest opinions, because I feel the dire need to do so. Okay, pre-market movers here on Dow Jones. Oh, sorry. Apple barely up, Boeing's up, Microsoft, Intel, Chevron, Cisco, Okay, S&P 500. NCLH down 6%, Marathon Oil up 7%, Occidental Petroleum. So oil plays are still doing good. Energy is still doing good. Many people try to predict what will happen to oil prices, and this whole past week I was telling the team on the community, that's the reason why we played oil. We played ExxonMobil. We played a bunch of different things. The reason why we played these is because you need to understand that OPEC is not going to agree to a deal so easily. Okay, they're not going to agree to a deal so easily. These things take time. Okay, ExxonMobil's up at $60 right now, and obviously, don't go and purchase right now. Don't go and buy these things right now. Wait for the pullback. Wait for the run to cool down. But I think there's no point to squeeze this further. It's like wringing a towel dry. Don't chase something that's running. Okay, but I really do think that the next rotation here should be into your consumer staples and consumer defensive. Okay, this should be really the main focus here. Energy is of course one of them as well, but pull back first on energy before re-entering. Okay, real estate also typically does well during high inflation or expectation of inflation. Okay, so those are a couple of routes you can go. Picking up shares of a couple of companies are attractive at these levels, and let me tell you what are the ones that I have picked up as of yesterday. This is a sheet that I share with the Discord community, so I'll just show you very briefly what I picked up. I picked up some Lockheed Martin, Alibaba, Adobe, Amazon, Salesforce, KWeb, which is something that I told you I would buy from a long time, Palantir, Mercado Libre, ARK, ARKK, but a very small position in there, Microsoft, Costco, J&J. My ARK position is an equal split allocation, but only 15%. And this position is exposure towards Tesla in another way, and also exposure towards other stocks that I want to trade within the innovation space. Okay, so that's the reason. I would rather buy a diversified portfolio of things rather than go and buy Tesla outright. Okay, but that fund has 10% weight Tesla, so it's basically as good as I own some of Tesla now. Okay, through an ETF, which I like that kind of exposure rather than holding everything outright in Tesla itself. I think it will do well over time. All right, so that's the way I look at things. And remember, these are positions that I intend to hold for a long time. I will be allocating a third tranche over here. If markets fall one more time, that's when I will allocate the last tranche. And that will be my final allocation for that portfolio. This is 40,000 plus 10,000. And then I have another 40,000 allocated in another account on IBKR. And that account is mainly just S&P 500 ETF, which I have been averaging down for a long time. So those positions are going to be there. I transfer them over, and so they'll continue to just accumulate in there. So my portfolio is split between dividend stocks, growth stocks, cyclical stocks, healthcare, industrials. I take them all. Okay. Okay, great. Now, ExxonMobil, another thing that you need to understand or note is the reason why we took that was almost $12 million worth of shares bought for ExxonMobil. Not sure if you guys saw this. It popped up on the scanner here. This one guy bought it, and then another guy bought it too. I think it was on the second page maybe. ExxonMobil, bye. There it is, here. So this was 1.4 mil, 1.4 mil, and then this was another, I think, don't know how many million. That was a lot of shares bought. Yeah, like 10.6 million here. Okay. Other than that, Dominion Energy, a director bought some. Dominion Energy, this is another one. So you might want to look at that. Definitely might want to look at Dominion Energy since, you know, this stock has been selling off. The director buying shares at this point could mean something, you know, that the share price might go up in the future. But he bought a very small position, but he bought 2 lots, so this is a total of 138,000 and also a million. So $1,138,000 worth of shares here on Dominion Energy was purchased by a director. Okay. It's not a lot, but it's about 12% increase. Okay. And he bought it at $69.20 something cents. So interesting timing on that. And obviously you should look up this company and see whether it's a good company or not before purchasing the shares. Okay. Great. Okay. All right. All right, let me read some of these comments here. Come to New Orleans. Everybody loves New Orleans. Absolutely, I will visit one day. That would be awesome. So what are your top 10 must add now, if you don't mind me asking? Top 10 must add now. Lockheed Martin. Okay. United Health is approaching buy price, yeah. I would do Johnson & Johnson. These are for diversified portfolio means. I would do Amazon, nibble of Amazon, not full allocation but nibble. Microsoft, I would nibble. What else? You can take Coca-Cola for a long-term hold. PepsiCo is another long-term hold. And then what else? Salesforce, for sure. Salesforce, that's like a obvious one. Company's a great company, but it's trading undervalued right now. And Alibaba as well. Those are the ones that I would definitely buy, like for sure. Obviously, not investment advice. This is not investment advice. This is my own opinion. Remember that, okay? Based on my own valuations, okay? So based over here, I put all the valuations here as well for my team to look at, and also the buy points so that they know where they can take the shares at. This is part of the the benefit of being a part of the community. I give the access to them so that they can view the portfolio live every single step of the way and be informed. Okay, great. Let's choose the ticker of the week next week. What are you guys feeling like? So I think a couple of you had some suggestions, right? Let's see. Good morning, T. Let's fast forward to the TA course. Yeah, thanks for signing up for that, Toby. I'm really excited to see you guys at the TA course, by the way. Uber. I feel like we have we done Uber before? I don't know if we did Uber. Maybe not. Huh. Uber. Maybe we did? I don't know. Let's see. I mean, we could do Uber. I wouldn't mind it. Let's see, did we ever do Uber? Maybe not. No, I don't think we have done Uber. Would you guys want to do Uber? We could do Uber. I wouldn't mind doing Uber. Uber is a good one. Something different. Yeah, I don't think we have done Uber. Uber. Yeah, we did do Uber. Remember that whatever stocks that you pick, they should be, they should have a pretty good track record. Okay, you should get a pretty good track. Like it should have a pretty good track record so that I can value it. Okay. STZ, Constellation Brands. That's another good one too. Kramer says this is the beginning of more downside. Kramer always says stuff like that. When, you know, I don't know. I personally think it doesn't matter upside or downside. You nibble shares at this moment when it's on a fire sale. And then if it goes down more, you add more. Simple as that. You never ever expend your bullets of your gun all at one time. You always fire in blocks. You never ever take everything out at one time. Let's see, what else here? FCX, what is that? Freeport McMoran, Metals and Energy. Okay. Looks interesting, but looks a little overbought to me. But looks good though. But needs a pullback. Verizon, yeah. Okay, we could do Verizon too. Let's see. GHVI. What is that? Holdings company. No, not this one. Not this one. This is a SPAC, huh? Nah, not this. No way. Not this one. CLF. What is that? Cleveland Cliffs Mining also. Why are you guys asking me to do mining stocks? Don't be asking me to go with mining just because, I don't know. DraftKings, that's not bad. That's not a bad one. DraftKings is not a bad one. This would be a play on Penn too. We could do DraftKings as well. But I still like Uber as a choice, and STZ is still better. You get a mix of tech bounce back, reopening play on a nice discount. Yep, that is true. Let's see. T, what do you think of Palantir? I just added 100 shares Palantir to the portfolio. I think that it's a good growth stock, but remember that during times of inflation, growth is not really the best play. That's all I'm going to say. Okay. But I'm taking Palantir because I think that it's a good price point for it. $20-something for a company that does good, like has substantial revenue with government contracts, good cash flow so far, and is showing signs of profitability. I think is a good one. I hope they expand though, and I want to continue to see how this company does. But I think at this price is good. The price that I got it at is decent, $20-something. I picked up Palantir at, let's see, $25.27 is what I picked it up. I think it's not bad. Kramer the Goat, mod me. Actually, we do need one more mod. But are you sure you're going to be here all the time, though? I will add mods to this chat eventually. More mods. Fastly filled with tsunamis. Fastly might be another good one too. Okay, how about, okay, so there's a bunch of different ones. So Fastly is a great swing trade here, by the way. Fastly, Uber, STZ, Constellation Brands is a good one. Good long-term hold. It's a good long-term hold. What else? T, what are your thoughts on owning Apple? Not on my price point to buy yet. My intrinsic valuation for Apple is at 110. 110 or 120, I buy. Not now. 120 is still a little high. It's like fairly valued at this point. I mean, I could nibble shares, but I would like it to come down more. That's what I would say about Apple. It's not irrationally oversold yet. What did DraftKings? I thought we did DraftKings. No, we did Penn. We did Penn. Mario says that he's here every day and he will help out. Okay, are you sure? All right, fine. I will make you a mod. I will make you a mod, Mario. You are now a moderator. Fastly. Okay, let's put it to a vote, guys. So on the voting screen, we have a choice between Uber, What was the other one? Uber, DraftKings, Fastly, and STZ. 4 of them. Pick one and vote right now. Go. Fastly, Uber. Let me type it down. Fastly, Uber, DraftKings, or STZ. Vote from either one of these. One, two, three, four, 5, 6, 7, 8. 8 Fastlies. 1, 2, 3, 4 Ubers. 5 Ubers. All right, seems like everybody wants Fastly. All right then, Fastly it is. Looks like a good one to play too. Nice little swing trade, and you know how I like swing trades. Those are my specialty. Looks good. I'll do up the chart and prepare it for you guys. I'll probably do a 4-hour chart on this one. Yeah. Just came out of cup and handle, got rejected here, came down. This is a good spot to buy some. So let's analyze this one real quick. First things first, let's get rid of this trend line. Don't need that. The cup and handle can stay. Let's get rid of that too. And now it's a inverse cup and handle possibly. Inverse cup, but we haven't formed the handle. Fastly won the vote, guys. Fastly won the vote. Let's see here. Okay, so I'll do the TA on this one a little bit later and post it for you guys. As usual, we post the TAs. We post the TAs a little bit on Sunday before the week starts, and we'll be holding a webinar as well. So stay tuned for that. Alrighty. Okay, that's great. Now let me do some ticker breakdowns. TY for tips on hedges. My SPY puts paid 342 was in fact the bounce. Excellent, David. I'm glad that you caught that. And that's what happens when you attend the live stream regularly. You know, you pretty much get these nice little tidbits that you can use to your favor. In fact, yep, 372 was perfectly the bounce which we called out. Things have a way of working out. So I'm glad that you made money on those puts and stayed hedged. Remember that we've been talking about being hedged for how long? Like a really long time, okay, guys? Like a really long time. It's a good thing that you guys are really remaining, positive and hedged and whatnot during this time, because that's what's important, okay? So we continue to see market buy up here, and we'll see if we can reverse back up today a little bit. I picked up a bunch of shares yesterday on that drop because I knew that it would be a great buying point. Since the 150 moving average has been a constant level of support, even the 200 moving average, but we were a bit too far from the 200 moving average. That's the reason why I kind of bought right here, when it was hitting the 150 moving average. I nibbled, and then if it was going to drop further, I was going to buy more so that we could pick up to the upside. Remember what I tell you guys about the probability and statistics of things happening, okay? 5% corrections are very nominal, happens 2 to 3 times a year. 10% corrections happen once a year, and more than 10% corrections happen once every 10 years, okay? 10 to 12 years, in fact. So the COVID crisis saw us have a 30 what percent? 35% drop, right? 35% drop. And then after that, we had mini drops, right? We had mini drops. We had this drop, right? This is what? 8%, right? 8% still nominal. 7% still nominal, okay? Then we had another one here, which was, this was early in 2020, 10% here. And then here again, another one, we had 9% here, right? And then we went on a huge bull run. And then another, maybe, what was this? Another 5% drop here, right? This one was maybe a 5% drop. Let's see. This was, yeah, about a 5% drop, right? 4.5%. And now we're getting another, we got another 6% drop, okay? So these are all within our scenarios of correction, okay? But realistically speaking, the S&P 500 doesn't drop, 30% every year or something like that, okay? It just doesn't happen. 10% is nominal, but us like saying that we're gonna drop all the way down to like a big level drop like this is a bit unrealistic because of the probability and statistics for almost 120 something years, okay? So I'm taking that information based on a long period of time, okay? So that's something you got to take into account. Okay, great. Let's see here. Amazon 3150 for 326. Amazon 3150. It's possible, but I would be cautious about that. I mean, I think it's a decent spot, but just be careful. I'm looking to add one more Amazon share today. Hopefully, if we can get a pullback of some kind, I would love to add a couple more Amazon shares. I want actually one more Amazon share at a nice cost average here. So that will bring my cost average down a little bit, and it would kind of bring this position down to a nice little price point. I want to add one more Amazon, and then I want to add a whole bunch more of other shares as well. CRM is, I'm telling you guys, CRM, really good price here, guys. Extremely good price. I don't know what to say. It's a very good price to buy this company at. If you look at this on the weekly candle, you'll see it came back and retraced back deep into the 50 EMA, which is still within the range of this retracement here, and it's actually bull flagging on the weekly. Okay, it's actually bull flagging on the weekly right here. Look at that. So a retracement back up to 230s is highly possible with CRM, and then maybe a breakout if anything. So on the weekly, this looks great. Just saying. Okay, what else? Fastly down 40-something%. Yep, that's up on the upside. Fastly has gap to fill 92. Okay. Fastly has a couple of gaps to fill. There's a gap. Let's do all the gaps real quick. There's a gap right here. There's a gap right here. All right. And then, yeah, these two gaps have to be filled at some point. So on a retracement here, it would make sense. Do I like this business in terms of how it is making money? I wouldn't buy shares of this business, but buying options maybe might be a good idea. Playing this to the upside at $70 or $80 for a month or two out might be a good play. Especially this is a double bottom here, and we had the double top on the top, so we may see a bounce between here. Okay. Great. So we shall see with Fastly. USO short put $70, call October 21st to January 22nd. USO. Ay ay ay. You want to sell a $70 put on this? Is that what you're saying? Wait, what? Short put. Kevin, can you rephrase your thing, because it's highly confusing. You said short put and then you said $70 call, so I'm a bit confused. Did you mean a spread, or what did that mean? Boeing. What about Boeing? What's your rationale on cutting versus average down? I have some May tech contracts. What is your rationale on cutting versus averaging down? Well, it depends on what kind of losses you're in. If your position is at a more than a 50% loss, and you're at this spot right here where you're deciding what you want to do, then you should absolutely be averaging down if you know or you have a strong conviction that the stock is going to reverse. You only cut if you know that the strike that you're going to hit is beyond reach. And if you're 80% down, 90% down, you think that it's never going to hit the strike in time, you cut. Simple. By the way, guys, I would really truly appreciate it if you can take a second out of your day right now and do me a big favor. Please, please, please smash the like button. There's 57 of you guys here, and the only thing that I can ask for when you're on this stream and you want to help me out is to help me hit the like button. Because if you do, the YouTube algorithm helps recommend this stream to other people. And I really, really want other people to benefit from having access to this stream as well. So if you can take a second out of your day, lightly tap the like button, and maybe drop a comment on this video a little later. Tell me what you like, tell me what you don't like. That really helps me out, make the stream better, and I do want to constantly improve the stream, so it would truly assist me. So once again, smash the like button if you can. I would really truly appreciate it. 56 of you. I feel like maybe we could get 50 likes. You think we can do 50 likes? We need 20 more to go. Can we? Can we, guys? Fine. If we get 60 likes here, if we get 60 likes, I'll let you guys in on today's live trading session. How about that? That's a challenge for you guys. 60 likes, and you guys get in on the live trading session. I'll send a Zoom link on the chat. What's the best way to contact you other than here on chat? You could contact me on Instagram, Everyday Growth Advisor. That's one way. Or you could contact me on Discord. I could put my Discord name on the chat if you like. This is my Discord name. You can add me as a friend and contact me there, or message me at Everyday Growth Advisor on Instagram. Both ways are fine. Oh, 48, 38, 39. Damn! Oh, shit. If we really get there, it's going to be crazy. Let's see. Maybe we might end up doing it. Let's see. Anyhow, I'll keep you guys updated on how this 40K portfolio does over time. I have yet to allocate $10,000 of it. And so I want to add more positions. Hopefully the market goes down a little bit more. I really hope it does. But if it doesn't, then it is what it is. We'll continue getting money and chasing these profits. I think this CCIV position needs to settle before this P&L corrects itself. Right now, it's all over the place because I haven't received the premium for what I received and all that. So it needs to write itself out a little bit. We'll see what happens. Okay, cool. Great. Now, also another thing that I want to put out there, if you guys ever need, coaching, one-on-one coaching, stuff like that, reach out to me. I'll see what I can do for you guys. I know many of you don't want to be a part of a community or don't want to be a part of, a course of some kind, but you just need help with specific things with your portfolio. I am actually going to be thinking about releasing a service like that. because I think that many of you benefit from one-on-ones with me more than the community outreach as well. So you know, once you know, that kind of gets set up, I'll be happy to have you guys you know, reach out to me and stuff like that. Cool. 42 likes. Don't think we'll get there. It's fine though. It's all good. Let's see. So taker of the week will be Fosli. Actually, yeah. Let me go ahead and do the chart for this real quick so that we can, you know, have that ready. Might have to use a 4-hour chart for this one. There's a lot of information here that we need to secure. So show you guys how to do this real quick. First things first, I need to make this smaller. And make it palatable. Okay, so this right here, okay, so we have a demand zone right here. We're actually in the demand zone for Fastly right now. And then let's see the retracement from here. So we have this going back up here. So we want a retracement back to the all-time high. That's going to be at least a 50% retracement is what we're looking for. So our target with Fastly is actually going to be somewhere around here. Damn, that's a big target. The supply zone is actually going to be right above the gap. There will be 2 supply zones on this one. One's up here, but we won't. That's not going to be valid until we cross the first supply zone. The immediate supply zone is going to be here, down to this level right here. Right above this gap. So that's going to be the interim supply. And now we can start to fill in the text here. So it's going to be the medium term supply zone. Make this a little smaller. And this is going to be our medium term demand zone right here. Since this is a 4-hour chart, we're going to be looking for a bounce, and then we have gap fills right here. So let's do. Where are the gaps at? Oop, what happened? So there's a couple of gaps. Oh, let's make that bigger. So there's one gap at 87 to 93 or 94. 87 to 93. And then a second gap at 104 to 107. I'm actually going to get rid of the fib here, so it's a lot more cleaner. And we'll move this up here. Actually, let's see. Yeah, we'll move this here, and we'll move this right here. And we'll get a couple of lines right here. Do we have any diagonal arrows? Let's see, can we do this? There we go. And one more like this. Perfect. We can save that. And then we need to do a screenshot. Damn, my mouse is like being really annoying. Alright, cool. Perfect. I got that sent over. Alright, well, that's done. Thank you guys once again for another week of attending the stream. Truly appreciate you guys being here. Once again, 44 likes. Well, that's good. Thank you. Okay, let's see. $30 range puts for short-term USO. Then looking for the 2022 calls on USO 70 to 100 strike. Yeah, sounds good, but don't try to time the top. Wait for the downtrend to form and then take it. And then after that, you can ride it to the top. I would say wait for the confirmations both. Wait for those two-wave confirmations and make sure that you don't try to time it. That's what I would say. Great. Okay, well, nice having you guys here. Thank you very much. My time is up. 2 minutes till market opens. I'm gonna get out of here because I gotta get on the live trading session with the team on Discord. If you're interested to see or you want to join our Discord community, learncompoundgrow.com. Click on Discord, EGA Discord right here. You can sign up with us and join the tribe today. We offer a lot of different things. Go have a look at what we offer. And we are about 90 members strong now, so growing every single day. And yeah, we hope that we see you there. See you on the trading floor. And boop, 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 boop. Do you think we're started to bottom or wait still? I can't answer that question. There's absolutely no way for me to know. But I would add positions here for long term for sure. I've already added some. All right, guys. Have a good weekend. Take care. Sorry I couldn't answer your question, Migs. I'll take it on Monday. Have a good one, guys, and take care. I love you guys. Thank you for tuning in, and I'll see you guys on Monday with Fastly. Thank you. Bye-bye.